All right. Good afternoon and welcome back to the Harmonic Trading Club on this beautiful Sunday afternoon. This is actually our second video or live stream or podcast of the day, but I just felt it necessary to go ahead and produce the content that I'm going to produce and talk about the things I'm going to talk about right now because they're very important. Can assist with the way that you approach the market, which I've been doing a lot of that recently, plus help you tighten that reticular and really continue to understand how the market really works, especially when it's moving harmonically, which it pretty much always is. That being said, some very important lessons that I want you to take out of this one and an opportunity, if you will. Remember, this is not a trading signal channel. We do not provide trading advice or trade signals or anything like that, but you're going to get ideas out of the things that I talk about because majority of the time when I'm doing my videos, it's actually live. So it's not like a lot of the other channels where everything that you see is something that already happened. Occasionally I might do things like that. But most of the time, I'm usually taking you up close to where if there's going to be a change in price action or some type of reaction, we're pretty much right on the cusp of it, as you'll see in this video here. So as you can see, it's titled Patience Pays and Using Opportunities Correctly to Get Involved in the Market when that opportunity. Good afternoon and welcome back. Second video. When that opportunity presents itself. So in this case right here, we're going to talk about currently what's on the table, but then we're going to talk about how it is actually the second chance to get involved in something that happened previously, which is some people are not aware, but it's really how the market reacts a lot of times. So let's get into it. Enough talking. So what I'm saying is, things like this. Okay. So a lot of people are not familiar. Maybe you will become more familiar with it as you follow my channel. These retests are actually when you get the opportunity. Okay. So sometimes let's say a trader, before we get into this, has 3 harmonic patterns in it, but before, let's say a trader did not have a good enough reason to take that trade right there. Let's say he wanted to, he was considering it, and he did not take that long shot. It was a pretty decent trade, by the way. A lot of times the market will give you a retest. So I'll just keep it plain and simple. Don't worry, relax. We'll get there. Got to slow down. You guys got to slow down with me because the teaching is so in depth. So in cases like this right here, what's good about this? I want to start here. What's good about this entire scenario is even if the trader did not take that shot right there, the first one, the opportunity still resulted in a double bottom, which is what you want anyway. Okay, so now that being said, I just want to take this off because I don't want us focusing on that part. Let's get to the real reason we're here, which is in this market right here. And as you guys can see me doing, get used to keying in and plotting out the market that you're working in, okay? So this is the area. It doesn't look like much. At the surface, it doesn't look like much. And then we're going to tie this whole picture together, okay? Because remember, when the market is consolidating, okay? So all of these things are the things that you need to tune your eyes to, and you will get used to seeing the market in its truest fashion over time. But notice this. When price action was on this run, what started happening? It started doing a whole lot of nothing. Up, down, up, down, up, down. It started doing a whole lot of nothing. But what you'll soon find out is when the market is doing a lot of this nonsense, it's actually reacting and creating a lot of harmonic patterns. And this time, in this example here, many times over. So unfortunately, I keep having to go and add on layers and layers and layers because I can't leave these things out, because over time you will see that these things actually matter. So finally, we are on the day chart. This is Canada, Swiss franc, CAD, CHF. And what's happening here, remember, it's more about the lesson, not about the pair or the asset. You can take this stuff and you can apply it anywhere. The principles are the principles. They do not change because this is how the market moves. So you got to understand how the market moves before you can even start trying to do any of your tricks or any of your fancy stuff. Even if you don't trade a system like structure analysis or advanced pattern, you still got to understand how the market moves first. You got to understand what's going on, why it does what triggers what. So the stuff isn't just as random as people think. All right. So maybe one day I'll get around to this. I need to come off today to show you a more clear picture and kind of key in on this area here. I think we'll start off on the 4 hour. This might do it because this is the area of interest. We're interested that block of consolidation that we saw and looking at all the stuff that was going on, we're going to start tying that together and building the real picture so you can see, okay, when is it my time to go? So I'm not going to walk all the way through the rules of engagement, but we're going to start right here, and I'm going to grab our advanced Cypher pattern tool, and I'm going to start our first impulse right here. That's our X to A to B, B to C, just up here to 127, and C to D down here, looking for that 786. So again, of course, I do need to come a little bit closer and clean that up. I'll drop down a little bit and see how clean did I get that measurement. And remember, we're just getting started, okay? We're just getting started. We haven't done or said anything yet. This is just the first part. But what this is going to do, again, like the title suggests, is allow the trader to get involved in something even more powerful that was missed the first time around. And that goes back to my premise when I was telling you, hey, patience, that's okay, because that's why I started it off with the market will give you another chance in many cases. Okay, so let me make the measurements a little bit bigger so you guys can see them, so this stuff really makes sense. And let me clean up the PRZ to 786. Okay, so for whatever reason, I think many of my last videos have all featured the Cypher pattern. All right, so CAS CHF, area of interest at the PRZ. Okay, letting that come back and fill, but it's really not so much about just letting it fill. It's about the overall picture that I showed you before, where there's structure in that area. There's a lot of reactions in that area right there. All right, so when it comes to patience, this is what I'll say. Let the other people go scalp crazy and get put through the meat grinder and get put through the buzzsaw and over leverage and stuff like that, okay? While you, okay, start practicing patience. And in order to do that, I'll be honest, yes, you do want to start at a minimum with your 4 hour, okay? And if you were to go ask the institutions and the Wall Street people, they will tell you the same thing. This stuff really, where the structure really matters, really begins on the 4 hour chart. None of that 1 and 2 minute stuff. I understand the want for the money, and I understand the whole get rich quick, and I understand the fear of missing out. But you'll be much better with higher performing patterns with higher win rates on larger time frames. Okay. So yes, you would want to allow this thing to come and fill. Let's come back to where we should be. I was off the mark. You would allow this pattern to come and fill because now you know that there is structure and support in that area around that PRZ, that potential reversal zone, or what I like to call my area of interest. That's what I'm interested in. I'm able to sit back. This is a 4 hour chart. Knowing that each candle is 4 hours. Okay, let's just do this. That was 4. That was 4. And that was 4, right? So that was 12 hours, right? That was 12 hours, knowing that it could take you another 4 to 8, maybe even 12. Okay? That's not long. Half a day, that's not long. 12 hours is not long. So if this continues pressing down, then we will get closer to being oversold on RSI, which we are not oversold yet. But we should expect to see some things change once we are oversold. We'd start looking for the bullish divergence in it. Like you see this little line here pushing up that says bull. We'd start to look to see if that's starting to be printed on RSI once it's filled, and only once it fills, okay? So now that we got that out the way, without teasing you guys, You want to have reasons for your own convictions, okay, on why that would even be important to you. I'm going to leave that guy there, even though he's gonna kind of mess up my picture, and I need to get rid of this guy. And I'll take out the line. I'll leave it there. Maybe I can find a use case to keep it there. But so here's where this is all stemming from. Remember, now you can see the line going through the support. There's one more thing I'm going to do here to show you guys something very, very solid. I'm going to take that line and I'm going to drag it down to the low right here. And when I say low, I'm talking about this guy here. Okay, that low right there. Notice what's happening. You get an exact test of it that began the cipher pattern. Okay, so in essence, you saw if you wanted to call that a retest, we're putting it all on the table here, guys. All right. But this is, look, I'll be honest with you. This is what you want your technical analysis to look like. Here's something else. Notice how clean this chart is. There's nothing on there but the cipher pattern and that line of support that we drew off. And I mean, look, the bullish divergence is starting to come in. All right. So even though this looks like, you know, a retest, it is. Let's go ahead and add on another layer to this. And I should ask that you guys hit the like button. Take this video right now, hit the like, and go share it with someone who's learning, who's interested in learning. Because you're not going to see this anywhere else, especially, and I'm just getting started. So I'm going to try to leave him there, but here's the premise of why. Grabbing the XABCD tool and starting swing low here. And you notice what's so good about this is I'm going to be here for the long run, for the long haul. And over time, you are going to see the charts like this. That's what gives me joy. That's what puts joy in my heart. So swing low to swing high, or our impulse leg, or X to A leg, and then our retracement coming down here, okay, crossing 50%, coming up here, crossing 38%, and coming down here. So here's the other part of the video that I was trying to bring in. Very important part. Let me make it bigger so you guys can see, okay? And I got to jump back one more time so that the measurements line up and make sense. I'll clean up and then I'll come bring this thing home for you guys. Not even that. There's more. You guys are going to have to sit and work through it. So now, maybe after this video, you'll finally believe, the market moves harmonically and nobody will be able to talk you out of that. All right? And it's not only identifying them, it's trading them correctly too. But in order to trade them, you need patience. You need to identify them, know what to expect, know that you don't front run them or jump the gun super quick and super fast and put yourself at risk and get caught up in the ones that fail. They're not 100% at all. Now, the bat pattern that we're talking about right now, the big green one that we just identified, that we're going to have to talk about that guy right now. The bat pattern, it's pretty solid. Because its D-leg completion is so close to X. So it's kind of like trading a retest or a double bottom. That's why it's efficient. That's why it works. In terms of how its win rate, I don't have that, but the bat pattern really, really gets off. And you can see here it really getting off. Hold on, I need to fix this D-leg. That's 886. It needs to be 886. I just had it. Come on. I need 886. There we go. Okay. So remember, the premise on this video is patience. And even if you missed that run there, okay, which is actually a winner, all right, so what I'm going to do is I'm going to show you the winner. Fibonacci retracement. Remember, the market moves according to Fibonacci. Whether you like it, hate it, understand it, or not, you're going to have to get that out your brain, okay? Watch how the market works. Fibonacci retracement from A, the whole pattern, A to the end of it, to the PRZ. Where did the market want to go? We'll make this a little bit bigger for you. That's already 16. Let's go to 20. Okay. The market wanted a 38% retracement, major level. Okay. A lot of traders who would have known that would have been ahead, would have been able to go ahead and get out, which is good because the market would have took it back. But that's still a winning trade. It's a first target on. Okay. It had been the first target on a 2-target trade. You always set up 2 targets, okay? One at the 38%, the second one at the 61.8%. So this is the major. This is when you're really done. But a trader who knows how to manage his trade would have basically took half of his position off and then rolled his stops up under it, then been out to trade, still a winner. Now, the good part about that is now being able to use that cipher as a second chance in that same area to get involved, okay? In that same bat pattern. So remember, it's a second chance. Missed the first time, come back, retest, knowing that the market is consolidating. So you can have confidence in it. We don't know anything for sure, but you can have confidence that you will be trading out of an area where the structure is respected, like it was here, like it was here, and like it was here. Now, that doesn't mean it's going to happen again. Could price get absolutely devastated and blown away? It can. But your job is to put yourself in the most highest probability positions, okay, which in this case will be this cipher pattern, which we know has a 65 to 70% success rate. So that's why it was good that I was able to lead with that cipher. So last but not least, in all of my bias, I'll be honest with you, I think these are the most amazing things on the planet. I want to come back. I want to throw another branch on here. And it is right here. So this thing actually started with, watch this. This thing actually started with impulse X to A to B, B to C, and C to D, 786. Come out a little bit. Look at that. You got the big one in the middle and the two. And did these happen and work? And let me, before I go clean up, look at the reaction on the first one that triggered all of this. Okay. So let me go clean it up just to make sure we have everything righty and tidy on it. So we're just not plastering stuff all over the place. And then hopefully you guys will have learned the lesson today. 786, get in there. Okay. All right. So the thing about it is, once you really understand how the market moves and that it continues to do these types of things, how about this? When we go, I think 8 hour would be the best. Okay. Once you understand that the market continues to create these harmonic patterns over and over and over and over again, it kind of just puts you at ease, sort of, I'll say, and allows you to relax and let the market come to you. But you got to be able to identify them. That's why I do teach the rules, what's valid versus what's invalid. Everything here valid all the way to the T. And a lot of the stuff like reaction to almost perfection, like the first cipher, that's just ridiculous. The bat would have made traders nervous with a little bit of drawdown, but still a reaction winner, 38%. Come back, retest. You can only hope that you can get the same type of reaction there, and hopefully that cipher will react just like the cipher that came before it. We can't expect that. We can't say that. We can't predict that. But our job is to identify. Okay. So there's a phrase that I was taught by my mentors who taught me this. I didn't get this stuff out of thin air. I was taught by some very, very powerful people that are still out there. I had to pay a heavy price for it. You don't. You're getting it here on the house free. But, and it's called identify, predict, decide, execute. But because of where I have advanced as a trader and as an analyst, I've taken the predict part out because there's no reason for me to predict. So it's more of a identify, project, decide, and then execute. But I would even have to change that because you guys understand that I even have levels of confirmation that I adhere to. And I typically don't break those rules. So there's no FOMO. There's no fear of missing out. There's no what if. It's okay. Okay. And then especially understanding that it usually takes some time. So I'll put it like this. When I say take time, and we'll go ahead and get up out of here. I think we've done enough. So okay, when I say front running, entering too early, okay, that field, worst case scenario, okay, least case scenario here is next bar market. Letting the market show you that this was a winner so that you don't get faked out. How did the market show you? Here's the level of confirmation. Allowing the trigger bar right here to close, taking out those two above them, okay? And then remember, I always said somewhere in there, it's always so much. There's going to be a retest there too. Coming back to test the structure, in this case, created by that doji right there, okay? So you want your eyes to start tying all of this stuff together. H and S's all day, every day. Head and shoulders, is that what you mean? If you could tell me what particular pattern you're looking at, or if you're talking about here, then I'll take a look at it. But so in the first cipher, still, when I said the patience and confirmation, by not allowing this to confirm these, and the ones that fail, and traders lose, that's why, because they don't wait for this, because they're too worried about leaving that little bit of money on the table. When, watch this, it didn't matter, because your targets are based off Fibonacci, C to PRZ. So retracement, C to PRZ. And remember, I told you on Cypher, 618 is easy. 618 is easy to get 618 retracement on the way back up. And, oh, I put that in the wrong place because I took my eyes off the chart. Say that again. So entry here, 618 is easy. And 786 is common as well, okay? So that's why 4 opportunities that, let's do it. Let's see how much it would have mattered waiting for confirmation. Long at the confirmation here. 618 is there, 786 is here. And then targets would have still had to be under the low. And then that's a 1.52 to 1. It's kind of hard to see with the two greens mixing in, but that's how you want to be able to approach the market over and over and over. You said, what up, bro? Came a little late. Catch the replay. Yeah, please. This is a good one. Just basically tying in second opportunities and explaining that when you understand how the market responds and respects harmonic reactions, that a lot of times you get a second opportunity. So this is just really helping with the psychology that you guys need to slow down. Let's take that from this. Guys, slow down. Get rid of all the impatient. Get rid of all the I gotta go now. I'm gonna miss it, because the truth is you're not. You probably got about a 50% chance of it coming back to you and giving you a second chance to get in. And that's on all time frames, all markets, all assets. If you don't believe me, I don't know what to tell you, okay? And if you now know that the market continues to doing these things, you should be at peace. You should feel free now, okay? Even if you do miss one, keep your eye on it. He's going to give you another one. That's just the fact of the matter, all right? So share this one if you know somebody who is struggling. Share this with someone that you know is trying to learn, but make sure they start in module 1. Do not come and jump here and do stuff that is over the top, because it won't make sense. Like you guys saw me bringing it all in and mixing it together. It won't make sense. And you have to know all the other stuff. You have to understand. You have to be able to know that there was structure and support there that triggered that first one. You have to understand Fibonacci for those targets to understand why there was a reaction at that 38% of that A to that D. You have to know it, okay? You have to understand things like the A to B is equal to CD pattern. You have to understand how not to try to trade broken and valid patterns, because you're going to pay a heavy price. Broken patterns are broken for a reason, right? They're broken for a reason. So you don't force them. Take the good ones, throw the bad ones away. So you see 3 all imperfection here. All right. So patience is your best friend. Okay. No position is the best position. You guys take that and drill that in over a few months, it will become second nature to you. And guess what? The FOMO will leave your body and you will be freed. You will be emancipated. And I'm telling you, it is the greatest freedom in the world, in our world, the trading world. All right? To not have that jittery, I gotta go, I can't help it. When that's removed from you, it's hard to even explain it. So take what I said in this video and use that for your patience. Let me do it a different way, okay? Let me do it a different way to help out with that patience thing. Let's say you saw this cipher coming and you wanted to trade it. Here's how you deal with the patience. Knowing that on the fill, here's the easy way. I'm on an 8-hour chart. Knowing that you still needed 8 hours. So if you're able to identify a pattern, you need to go ahead and add 2 more sessions to the fill. 1 at the minimum. So that will help you pull yourself back. You need to give yourself at least 1 more session. In this case right here, that was giving 1 more session. That's the green one. Letting that close, then you go. Jump in, he comes up, you're happy, he starts retesting that doji right there. You get a nervous, you're like, wow, I entered, why am I down? Why am I down every time? Because the market needs to do certain things. Let me do this. I'm supposed to be out of here already. Let me, who was that? Is it NZD CAD? Yeah. Is it NZD CAD? Yeah, okay. NZD CAD, 1 day. Now, it's not a good enough example with so much going on in there. Let's do this. Let's do this. Okay, so you saw the 2 advanced patterns on NZD CAD. We got the NZD CAD video out there. Inside of it, what was still there? Head and shoulders pattern. So second attempt, second chance at getting involved in the larger bat in that package, in that combo. If you still don't believe that the market continues to create advanced pattern after advanced pattern, but let's say you didn't know that. The market's still giving you a S&H, somebody mentioned S&H, or a head and shoulders, perfect pattern to get involved. And then, hey, the person could say, you know what, I'm just going to put a stop ahead of the right shoulder, and I'm going to trade that bad boy. That's not a trade signal. Do not go run and jump on NZD CAD and trade it, okay? So, we'll leave it at that. And it's pretty much all we have on this one. Share this video if you know a trader that it can help. Head on over to the Harmonic Trading Academy playlist where I teach everything that I talked about in this video in great detail. Hit the bell icon so you'll be notified when, of course, the most amazing technical breakdowns on YouTube are released. That being said, enjoy the rest of your beautiful Sunday. I hope this video provided a lot of value to you, and I will see you on the next